San Diego saw a 16% hike in home remodeling this year, and this isn't a design trend, it's a direct response to our insane housing market. Tight inventory, high rates, rising home equity. This new data shows that many homeowners are saying the hell with it to selling. Instead, they're staying put and transforming what they already own. The shift is slowly reshaping the future of housing in San Diego. More on this shortly. You think investors have backed off from this market? Think again. Nearly 1 in 3 homes sold nationwide are now going to investors. It's the highest level in years. And with high mortgage rates freezing out traditional buyers, it's the all cash crowd that's moving into the market to some degree. So how does this play out in San Diego? Stick around, this shift could absolutely affect your next move. This and more covered in this week's San Diego Market Matters, and I'm Karl, your San Diego realtor. If you're enjoying the updates in these weekly market reports, be sure to like and subscribe to the channel if you haven't already. And if you're thinking of selling or buying here in San Diego, I have my contact info in the description below. People like you are reaching out to me regularly for help. Let's connect and see how we can make your next move happen for you. Now, let's get into the good stuff. Let's kick this off with your quick market update. First, jobs. The June report dropped and the US added 147,000 new jobs, a solid print slightly above expectations. Unemployment, that ticked down to 4.1% and jobless claims fell as well. The job market is holding. It's not booming, but definitely stable. And stable jobs means buyers still have income, even if affordability is still brutal. Now let's talk mortgage rates. After 5 straight weeks of declines, the 30-year fix ticked up slightly, but we're still thankfully sitting sub 7%. Meanwhile, housing inventory is quietly climbing. According to Realtor.com, we crossed the 1 million active listing marks nationwide for the first time since the pandemic. That's a 29% jump year over year and the 20th straight month of inventory gains. Buyers now have options. To sum it up, job market stable, mortgage rates nudged higher, inflation's flat-ish, and inventory is up again. It's not the market of your dreams, but it's not falling apart either. We're in a holding pattern, and for savvy buyers or strategic sellers, there's still opportunity out there. Now let's jump into an emerging new trend that may mess with your availability of a home to buy. Recent data by Shiner Construction reports that San Diego's seen a 16% jump in remodeling permits this year. Over 15,000 permits already issued in 2025. That's not people repainting their kitchens. We're talking full house renovations, ADU conversions, and serious money getting poured back into homes that people aren't planning to leave. At least not anytime soon. Why? Because selling your house and giving up a 3% mortgage for a 7% one feels like financial sabotage. So instead, more homeowners are saying,
screw it, let's remodel.
They're adding space, upgrading kitchens, and modernizing layouts and staying put. And when you look at the numbers, this is way bigger than vanity projects. Kitchen remodels made up 35% of all permits. Bathrooms were 27%. ADUs and garage conversions were 18%. Then you've got landscaping and energy efficiency rounding out the rest. And the average remodeling budget, 45 G's. This tells you that people aren't just slapping a coat of paint, they're rethinking their homes completely because moving is no longer practical anymore. And this especially hits hard here in San Diego. Though our inventory is up, we're still sitting well below pre-pandemic levels. There is not that much to buy, and what is available often feels overpriced. Thus why we're seeing an uptick in price reductions, or agents want to label them as price corrections. But that's not the only factor. High home values are actually enabling the shift. Think about it. When your home is worth more, you can tap into that equity. Many homeowners are using HELOCs to access their home's equity because it doesn't feel like spending, it feels like investing. Especially when your neighbor recently sold their place for 1.3 million and your layout looks a little 1995-ish. There's also a lifestyle piece to this. People aren't just expanding space, they're adjusting for new realities. Multi-generational living, work from home setups, aging parents, income producing ADUs. All of this is reshaping what we want and need in a home here in San Diego. And then you got the green push. Energy efficient remodels are on the rise. Solar ready systems, EV charging stations, drought tolerant landscaping, tankless water heaters, all showing up more in neighborhoods like La Mesa, Pacific Beach, and Chula Vista, to name a few. Part of it's environmental, sure, but let's be honest, part of it's chasing a rebate program and future-proofing your investment. Now let's not ignore the challenges. There's a labor shortage. Contractors are booked 6 to 10 weeks out if you're lucky. Licensed electricians, plumbers, and carpenters are in high demand. So if you're thinking about remodeling, start planning early and don't expect a bargain. The smart move right now is strategic upgrades with long-term ROI, not HGTV style gut jobs just for fun. So what does this mean here in San Diego? It means our housing market is adapting. Instead of churn, we're seeing reinvestment. Instead of moving up, people are building out. It's not just economic, it's psychological. People are anchoring down and making their homes work for them for the long haul. And that might be the next movement towards a new norm here in San Diego, at least until rates come down or inventory really shifts. Now, let's catch you up on the recent report about investors buying up the market still. Investors hit a new 5-year high, scooping up nearly 27% of all homes sold nationwide in the first quarter of 2025. We're not talking about massive hedge funds buying up entire neighborhoods either, although they're still around. The majority of these investors are mom and pop buyers, folks with 1 to 5 properties. They made up 85% investor-owned homes in this report. Even with that, the data shows they're beating out traditional buyers simply because they're not playing by the same rules. They're not rate sensitive like the rest of the market. They're bringing cash, leveraging existing equity, or using real estate as a shelter against inflation. And that's a damn smart move, by the way, because let's face it, cash sitting in a savings account is getting eaten alive by inflation. But real estate holds up. It's physical, it's rentable, and over time it appreciates. That's why investors keep coming back to it. Now here in San Diego, we're definitely seeing fewer house flippers. The quick in, quick out game doesn't pencil like it used to, but that doesn't mean investors are gone. What we're seeing more is a long hold strategy. People buying to park capital, create cash flow, or even hedge against uncertainty. Because San Diego is one of those markets that has long-term desirability baked in. Even if appreciation slows, it doesn't erase the fundamentals. And here's something that's going to turbocharge this trend. Trump's new One Big Beautiful Act. Yep, that's what it's actually called. It passed on July 4th and it made real estate investing even more attractive again, especially for small and mid-sized investors. Word is already spreading in investor circles and is expected to fuel more demand for investment properties in the near future. So what does this mean for you? If you're a buyer, it means you are competing with more cash-backed or equity-rich offers. Investors aren't flippers with HD TV vans. Many are regular people trying to buy second properties and beat inflation. So if you're writing offers, be mindful. There may be some competition from time to time that is all cash. If you're a seller, especially in certain neighborhoods or entry-level price points, this could be a golden opportunity. Investors are back in the market looking for solid homes with rental potential or long-term value, then you're a prime target. So if you got a property that fits that profile, there may be a new buyer on the block for you. And they're not necessarily scared of 7% interest rates if they're putting all cash or a large cash down payment. And if you're watching from the sidelines, whether you're a renter, an aspiring buyer, or someone thinking about jumping into real estate investing yourself, this data matters. Because investors don't chase hype, they chase performance. They follow the numbers. And if they're buying again, that tells you where the smart money thinks things are going next. Only time will tell how impacting and how long lasting this next investor wave will go for. And that's a wrap for this week's San Diego Market Matters. I am so close to breaking 500 subscribers. If you haven't subscribed yet and you got value out of this video, here's your opportunity to subscribe if I won you over. If not, give me another chance. Hopefully I'll catch your interest with one of my other videos, which should pop up in either of these corners by now. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.